Welcome to Mortgage Solutions Television. Now this week we have in the studio Ben Thompson, who's Managing Director of Legal & General's Mortgage Club. Big welcome, Ben.
Hi.
Now he's a well-known media commentator. He's also the chair of the Mortgage event, the Mortgage Solutions events conferences, and he's one of the strategists behind Legal & General's ascent to key distributor status. So very pleased to have Ben with us today. Now this year is already looking interesting for the mortgage sector, and the fight for critical mass is continuing and gearing up, some would say. So one of the big announcements you guys made very recently was a distribution deal with Metro Bank. It's a new entrant. This is exciting stuff. Tell us a bit more about it, Ben.
Yeah, well, a good positive start to the year. There's quite a bit going on like that at the moment. So Metro was a good release yesterday and a good launch with Metro Bank. Very pleased with that. I think over the course of the last 5-6 years, this fight for critical mass you'd be referring to, a lot of it's been down to the addition of new lenders at a time when some other lenders have closed or ceased lending, if you like, go back over the last 5 years. So for us to bring new lenders into the intermediary market is really, really important. It's been a big part of what we've done over the last 5 years. We're delighted to have them on board. And I think also, in terms of what Metro Bank stands for and what it does, really interesting actually. I think a lot of changes in the last 5 years, well documented in terms of banks in particular. And I'm really interested in what the customer wants to do for the future, in particular, how they're going to interact with banks and through intermediaries. And I think Metro Bank offers something slightly different. Slightly fresh and slightly new, so we're really pleased to have them on.
Okay, so one of the perhaps biggest market move news pieces to come out recently was the Sesame sale, which was finally confirmed a little bit after the fact that after most of the trade publications had reported it.
Yeah.
So the big question is L&G planning to bid?
I'm not aware of a plan to bid at all, no. I can see why Sesame and its component parts, I guess, might be attractive to some suitors, probably a relatively small number. But I wish them good luck with that, and anyone who chooses to buy it exactly the same. I think it's one of the more exciting things that's happened in the market in the last couple of years, and we'll just have to see how it plays out, I think. But from our perspective, probably a no, I suspect. What
kind of impact do you think this will actually have on the advice market? In terms of giving perhaps brokers more power to their arm, you know, when we're talking about a massive distributor, whoever buys them will have, again, plenty of firepower.
Yeah, it's an interesting one. I mean, I think the number of variations, I mean, whether someone actually picks up individual component parts of that, whether they buy it lock, stock and barrel, if you like, whether it ends up being a management buyout, there's so many question marks at the moment. But I think undeniably, whoever picks it up, I mean, hypothetically, if it was us, we'd be huge in combination. If it went to one of a number of 3 or 4 other big players, exactly the same. But I think what we've seen in the last 5 years is, you know, obviously lenders will pay for volume. Yes, they definitely will do, but all the other bits have to stand up as well. So the same measures will apply. You know, how much control is there of these people employed? What's the quality like? What's the volume like? So normal rules apply, and we'll just have to wait and see how that all plays out. But it's definitely exciting for whoever might end up with it. And obviously, you know, wish Sesame good luck with it as well. So.
Okay, unlikely to be L&G though. You heard it here first. So.
I can't say yes or no, but I think it's unlikely.
Okay, thanks, Ben. Last week, LSL's Simon Embley suggested that lenders will soon start paying not only on quality metrics, but also on volume. Now, what's your view on that? And is that something that you're hearing rumblings about?
I think there's 2 or 3 comments on that. Firstly, I think through various market cycles, things swing and change. So, well documented in the lead up to 2007, there's a school of thought that says possibly too much has been paid for mortgage intermediation, if you like. Not saying that's right or wrong. What I would probably say today is the opposite arguably applies. If anything, it's got harder to take a mortgage through to completion from application today than it was 5 years ago, in some respects. So there's an argument to say they're underpaid now. So I think when the market swings, and this is really interesting at the moment for me because this is the first year for 5-6 years where you could look into the year and say this market will definitely grow. Definitely. And if I look at all the lender relationships we've got, almost all of them, just about all of them, are saying, I want to grow by quite a lot this year. What does that mean and why am I saying that? It basically means that at some point this year, 1 or 2 will wake up to the fact they might not deliver their targets this year because consumer demand might not be strong enough, possibly, and I hope I'm wrong, but I think that will be the case. At which point you start to think of other levers you might have outside of product to try and influence distribution. I'm not saying money is the be-all and end-all of that, but I do think when a market cycle starts to swing, people think differently than they've thought over the last 5 years. So to Simon's point, people will pay more for volume in the future. Whether that's this year, I doubt it, but beyond that, quite possibly. And I do think critical mass, to your point from earlier, is a really important thing to have. So I think what we can't forget and lose sight of is quality plays a large part as well. Lenders are getting better at identifying the quality of business that's submitted. So I think that both in combination, quality and volume, will very much be key for the future.
And the sort of dialogues that obviously the key distributors are having with networks, you know, you will use every advantage, presumably, to get advantage for your brokers. That's just the way it goes, and always will be.
Yeah, and I think it's, I mean, I always look at how long it takes to complete a mortgage. And I mean, very roughly speaking, it's probably 8 to 10 hours. I usually use 10 because it's easier to do the maths on that. But if you work out how much I would earn as a mortgage broker to complete a mortgage case, it's actually not that much on an hourly rate. So I don't think in any way, shape or form brokers are overpaid. In fact, if anything, I think it's the other way. So I'd like to think the market's normalised in that respect now, and what we'll start to see is probably a slight correction to the positive side as we go forward.
That's good news, in which case.
I would hope it is, yeah. I mean, no one ever knows what's around the corner, but I do think lenders will want to write lots of business. The branches of direct channels have a finite capacity that's been, again, quite well documented, and for me, I just think it probably needs to be, you know, fairly rewarded rather in the future. Okay,
well, a possibility of higher commission fees, in which case, well,
possibly, but not this year, I would say.
Okay, thanks, Ben. Okay, well, back to L&G. You're sitting here. Let's drill into a little bit more of the detail. And what's the state of play for L&G's AR network at the moment? I just wondered if you could. There's always a sort of a little grey area or a veil sometimes drawn over the number of registered individuals, sizes of firms. I wonder if you could just give me a little bit more of a picture of exactly what L&G's state of play is at the moment.
Yeah, well,
size and firepower, really.
Okay, so size and firepower. I'll come to numbers in a second. I think. Very exciting time. You know, we've had some changes throughout the organisation. You know, Duncan, as you know, is very energetic and excited and enthused around the network, and certainly we have some very exciting plans. I think hard numbers, I think it's 55 firms we have. We have about 700 business writers on the AR side. In addition to those 700, we have a lot of other firms and individuals who are directly tied to us for protection and or general insurance and mortgages as well. So numbers very significantly over 1,000. Last year on the AR side, we grew over 150 new business writers into the AR side. So we are very progressive as a network. And I think the most important thing for us, a couple of things. Firstly, we have quite big plans in that regard, which is exciting. And then secondly, I do think we're relatively uniquely positioned as well. And what I mean by that is, firstly, from an ownership perspective, you know, we're owned by a FTSE top 40 company, which puts us in a financial position of real strength. And that's relatively unique in the network space. I think secondly, you can pretty much bet your bottom dollar we'll be here in X number of years' time. So we're not looking to sell the network. We wouldn't turn it, sell it, you know, divest of it in the future at all. It's core to what we do. It's really important to what we do. So I think if I'm making a decision as an appointed representative or even a directly authorised individual or firm, I would look to Legal & General as a very safe place to go for a long-term bet, also with exciting plans as well. So I think we're in a really good place.
Okay, second time you've mentioned that then, Ben. Lots of exciting plans. Nothing you can share or anything you can share at the moment?
I think nothing specific to share except the fact that probably we recognise we would like more critical mass. I mean, from our position, I don't necessarily see any M&A activity. I think I partly answered that earlier for a bunch of different reasons. But I think we're very confident we can grow through this next cycle. And yes, there are some plans, and in time, obviously, we'll make clear what they are. But we're in a positive place right now.
Fantastic. Ben, thank you very much. Always a pleasure to have you with us. Thank you. And that's all we've got time for from Mortgage Solutions Television. Thank you very much, and see you soon.